Hey everyone, it's Joel from Geek Studios, and this is your weekly mini charge episode. We hope everyone is having a fantastic week, and we are excited about today's topic, which is hybrids versus EVs. And the question, are hybrids beating EVs? Not 5 years ago, but right now. Because if you're watching headlines in 2024 and into 2025, the story has changed. The narrative used to be simple. EVs are taking over. Gas cars are done. Hybrids were old news. But suddenly, hybrids are surging, EVs are cooling, and automakers are adjusting strategy. So today we're going to unpack the actual sales data, which companies are winning, why consumers are choosing hybrids, what this means for Tesla and legacy automakers, and whether this is temporary or a long-term shift. Let's dive in. So let's start with the US market in 2025. Battery electric vehicles, BEVs, sold about 1.5 million units. Traditional hybrids, these are the non-plug-in type, sold about 1.6 million units, and plug-in hybrids, PHEVs, sold about 280,000 units sold. That means hybrids, just standalone hybrids, slightly outsold full EVs. And when you combine hybrids plus plug-in hybrids, electrified vehicles that still have gas engines are clearly leading in raw volume. Now let's put this in context. Total US light vehicle sales are around 15 to 16 million units. That means EVs roughly have about 8 to 9% of the market, hybrids alone around 10%, and when you include hybrids plus plug-in electric vehicles, that's around 12%. And that's significant. What's even more interesting is the growth trend rate. EV growth in 2023 was 40% year over year. EV growth in 2024 slowed to roughly 10 to 15%, and hybrid growth in 2024 over 30% year over year. That's a momentum shift. It's not that EVs are shrinking, they're still growing, but hybrids are growing faster right now. To understand this story, we have to talk about Toyota. Now, for years, Toyota was criticized by me and Sebastian too for not moving aggressively into EVs like Tesla. Instead, Toyota doubled down on hybrids. And in 2024, that strategy did pay off. Toyota sold over 670,000 hybrid vehicles alone in the US. Nearly 1 out of every 3 Toyotas that were sold were electrified. Vehicles like the Toyota RAV4 Hybrid, the redesigned Toyota Prius, Corolla Hybrid, and Camry Hybrid are selling faster than Toyota can produce them in some markets. Toyota executives have publicly stated that they're increasing hybrid production because demand exceeds supply. Now that's a powerful signal. Instead of betting everything on batteries, Toyota diversified hybrids, plug-in hybrids, limited EV rollout, but we are starting to see some new ones pop out like the Highlander EV and the newly redesigned BZ, and some experimentation with hydrogen, which I don't think is going to take off. And right now, diversification looks like a safe strategy. Now, let's be clear. EV sales are not collapsing. Whatever you hear, they're not falling off a cliff. Companies like Tesla, General Motors, Hyundai Motor Group are still selling significant EV volumes. The Tesla Model Y remained one of the top-selling EVs globally. But here's the shift. Inventory levels for some EVs increased. Price cuts became more frequent, and production targets were adjusted. Ford publicly announced billions in EV division losses. GM has delayed some EV launches, and dealers reported slower EV lot turnover in certain regions. Meanwhile, hybrid waitlists were growing. This isn't an EV crash, it's a normalization after hypergrowth. The early adopters, like me, bought in. Now the industry is chasing the early majority, and that group behaves differently. So here is the heart of the story. Why are everyday buyers choosing hybrids? Well, first, upfront costs. Even with tax credits, which are gone, many EVs start around $5,000 to $15,000 higher than comparable hybrids. And with interest rates elevated throughout 2024 and 2025, monthly payments matter more than ever. Consumers feel the price difference immediately. Also, and something that is improving, is that charging infrastructure anxiety. Even though networks are expandingly and rapidly, like Walmart and Iona, charging still involves planning, waiting, reliability concerns, and installation costs at home if you're going to charge in your garage. Hybrids eliminate all of that. You get 40 to 50 miles a gallon and still fill up in 5 minutes. For suburban families, that convenience matters. You also have insurance and repair concerns. Insurance premiums on EVs have risen due to high battery replacement costs, structural battery packs, and specialized repairs. And hybrids feel familiar to repair shops. That comfort factor is real. Also, with this new market, range confidence. Hybrids don't require a behavior change. You never have to worry about road trip charging stops, cold weather range loss, or towing range drops if you're pulling that boat or, jet ski. Consumers are cautious during economic uncertainty, which is what we have right now, and hybrids feel safer. So let's look at this globally. Let's start with Europe. EV adoption is strong in Europe, but incentive reductions in some countries caused temporary slowdowns. Hybrid registration surged after the subsidy changes. In Japan, now hybrids in Japan dominate the market. EV penetration remains relatively low compared to Europe and China. Toyota's hybrid-first strategy is aligned with its home market, Japan. And finally, the elephant in the room, China. China leads globally in EV adoption. But here's the twist. Plug-in hybrids and range-extended EVs are exploding in popularity. Consumers want electric driving without range anxiety. So even in the world's largest EV market, hybrids and extended range vehicles are surging. Now let's chat about Tesla. Love them or hate them, they dominate the EV market here in the US. Tesla still holds roughly 55% of the US EV market share. That's dominance. But Tesla also cut prices multiple times, saw margin compression, and focused on cost reductions. Tesla is betting on next-gen affordable EV platform, which someday we hope they announce, charging network expansion, which we're seeing, and software and autonomy revenue, like the price of FSD going up. Tesla isn't losing, but it's transitioning from explosive growth to mature scaling. And that's a very different phase. Automakers like Tesla follow profits. And right now, hybrid vehicles are profitable. Many EV programs are not yet. Battery costs have dropped over the last decade, but raw material, that's a tough word, but raw material volatility remains a factor. If a company can sell a $35,000 hybrid profitably or a $45,000 EV at thin margins, which will they prioritize? And that's what we're seeing now. So here's the big question. Are hybrids just a temporary bridge, or are we entering a long hybrid era? Arguments for EV resurgence say battery costs continue falling long term, the charging infrastructure is expanding, regulatory pressure is increasing, and more affordable EVs are coming. But those arguments for sustained hybrid strength say they offer consumer comfort, a lower price point, no infrastructure dependency, and proven reliability. So what's the most likely outcome? Probably a mixed market. On the urban coastal regions, you're going to see higher EV penetration. In rural regions, well, they're going to be hybrid heavy. And in those developing markets, those hybrids are going to bridge the phase to EV ownership. This moment tells us something important. The transition to electrification isn't linear, it's layered. Consumers move in waves. You have early adopters, you have the early majority, and you have the late majority. Hybrids appeal strongly in that middle wave, and that wave is huge. So, the question, are hybrids beating EVs right now? In US sales volume, Yes. In growth momentum? Yes. In profitability? Often, yes. In long-term inevitability? Well, that's still EV's territory. The reality is more nuanced than headlines suggest. Electrification isn't a straight line, it's a spectrum. And right now, hybrids are having their moment. All right, that is your mini charge episode for this week. If you enjoyed this week's episode, don't forget to like and subscribe on YouTube and consider becoming a paid member. It's just $5 a month and you get early access to all of our content while also supporting our channel. If you're listening on Spotify or Apple Podcasts, tap that follow button and leave us a quick rating and comment. It really helps the show grow. Thanks for watching, and until next time, stay charged and stay geeky.